Hey, welcome back to the Hub channel. We are doing our Delta Neutral breakout show today, and we have an amazing show for you all. We're going to be going over last week's trade, or maybe a couple weeks ago trade now we have on here, and we had over the holidays, and we're going to be covering obviously our top headlines because there's so much going on in the market right now. We're going to be taking a look at the U.S. market update, going over on what's coming up, some trades that we're going to be watching this week, and some other things. But of course, I am joined by Jeff Beamer. Jeff is a professional money manager and senior strategist over at the EWO Trader channel, and he is obviously our hike and a she guy. Jeff, it's been a while since we chatted, and there's so much to cover, so much going on. How are you doing? And obviously, I want to go over the last trade that you put on here on the channel. It was a doozy. It was a doozy. Comcast, I think it was, right?
Well, thanks, Brandon. Holidays were great. New Year was fun. Now we're back at it. The first full trading week of the year. And then we have a holiday shortened week next week because Monday's a market holiday, next Monday. So, but let's get right into it. Let's talk about Comcast. That was the trade I gave out last. And I did a Delta neutral trade that is something where we look for a stock to consolidate. And I did that because of all the days the market is closed through the holidays, multiple 3-day weekends, quiet trading. And this is the last image I left you with where Comcast was testing the upper break even of our trade. Now, what I did was I brought in the chart to kind of show you where the stock ended up. Okay, the stock sold off, which as you can see here, the point of that risk graph is at $43. That's where my strikes are. So I sold a near-term option and bought a longer-term option. And so if we advance to the chart, you can see here, I put the crosshairs right there on the close on December 29th. You can see that it had dropped. We missed the point of our trade by 84 cents. Okay. Now that's a trick. All right. Anybody can say a stock is going to a certain price. Okay. And you hear it all the time on financial or business news, but option traders are different. We have to not only estimate price, but we also have to estimate time. And you can see here, you can't see the tail of that candle because my lines are interfering with it. But you can see the next day on the next trading day, we actually sat down on $43, and then obviously we spent some time there. And ironically, the last green candle that you see is today, and guess where we're trading? Right around $43 and change. Okay, so this trade generated a little over, right around 1% to portfolio. And that's why we like these type of trades, because we can just kind of let them marinate, and then they contribute very nicely to a portfolio. So that's how Comcast ended up, Brandon. It was a nice little trade, and something nice to have on with all the holiday closings.
Yeah, I think that was a good trade to put on, and actually is playing. You're still in that trade, correct? Are you still in that trade, or you bounced out of it? Okay, nice job. I think that was a good trade overall, and I think that worked out well to your strategy, obviously. So with that being said, obviously there is a lot going on in the market right now. I know you're going to be talking about Bitcoin just hit 47,000 today. Gary Gensler coming out trying to wash his hands of the risk of trading crypto, obviously, and some other things happening. A lot of eyeballs are on that ETF approval this week. Obviously, they have the deadline is Wednesday. So what other headlines are you looking at in the market alongside that one?
Well, let's take a look, because I do have Bitcoin in there. Let's take a look at some of the headlines here. This is, as I mentioned, the first full week of trading is this week, but we're filled with economic reports and earnings. Okay, we waste no time getting right back at it here after the first of the year. Also, what you just touched on, Bitcoin rising above 47,000. And Brandon, let me ask you, do you think this is buy the rumor, sell the news? Is this a sell the news event for Bitcoin if they get an approval?
Do I have 20 minutes to answer this or two? Because this is a big one. Right now, a lot of people are saying, oh my gosh, this is a sell the news event. But that's wrong in so many ways because this could be the biggest onboarding event that crypto will ever see in any era of crypto. Because right now, if they do approve the ETF, there's going to be an onboarding of billions of dollars of capital flooding into the market amongst so many different firms. And once those ETFs get approved, you're talking 10,000 to 100,000 financial advisors across America now need to learn about crypto because they're going to be selling that product to all of their people. So right now, the normal ma and pa can't buy crypto or don't want to buy crypto because the custody of owning crypto is too complicated. Nobody wants to lose their assets because it's a risky investment or something shady where supposedly fraudsters can only buy crypto. But right now, once those financial advisors learn about crypto and start teaching about crypto, this event is going to basically onboard all those people to the idea of investing in crypto, especially Bitcoin. So if you are selling the news on this one, it's going to be a short sell, and I believe this thing is going to run itself up as people start to onboard into this environment.
Well,
hopefully that was concise enough for you.
I see some horns sprouting out of your head. You sound like a bull. You sound like a bull right here. All right. Let's get on
there we go. Yeah.
All right. So interestingly enough, if you haven't been following social media or anything, if you saw the Alaska Airlines jet that lost a door in mid-flight, that has really sent Boeing shares down today as the FAA grounds dozens of 737s. And there's all sorts of video from the captain's emergency call to passengers on board that were doing video. And fortunately, nobody was sitting right next to that door, which I find interesting. Okay. And away it went. So Boeing is down today. And then we have a couple of other things going on. Just kind of anecdotally, and I look at this as a kind of an interesting note. Tiger Woods ended a 27-year relationship with Nike. Now, that's pretty substantial, but we've heard that Nike's getting out of golf. All right, so it just makes sense that Tiger would sever that relationship. But what's even more interesting is that Tiger's not alone here. Ricky Fowler, if you follow the PGA at all, was wearing no logos at all in this last weekend's first round of the year. And he was attached to Geico, Farmers, and I forgot the third one. I'll remember here in a second. But those three, he's stepped away from his sponsors. So there could be some underlying things going on between PGA and Live Golf and sponsors, and keep an eye on that because that could be in the news as well. But let's jump to the charts and get to the broader markets. I think that was some interesting stuff, but we got some more good stuff here for you. Let's take a look at the broader markets. Begin with Spider Index Trust SPY. We have a rally going on. In fact, we have a nice rally up 1.2% as we start off the week. We began to sell off nice and orderly last week to begin the year. People were really concerned about that, but the bulls have stepped in and said, hey, at least for today, we're still here. Now, I would normally say this is the beginning of what I would call an ABC pattern, where we just kind of come down and then we rally and then we follow through. But this candle looks very strong. We'll see at the end of the day where volume is, but I wouldn't be surprised if we get something like this that happens. In fact, I'll leave this on my chart here for the week, and we'll see if we do. We could have another update where we possibly double top. But the sell-off, I'm still thinking we need to retrace a little bit after this big rally. Now, the spider, which was what we're looking at here, is not alone. The Qs The NASDAQ is also participating. Okay, we had dropped below our short-term moving average there, but boy, big reversal today for NASDAQ, and really it's the same headline. Pullback has been short-lived and bulls are back, okay? And then on IWM, on the small caps, we need a little convincing there, okay? We're still, as you can see here, we're trading right up against that short-term moving average. And, you know, Brandon called me the Heikin-Ashi guy because I do like to use Heikin-Ashi to kind of confirm different moves. And here is what that candle looks like. All right. So if you put it in context like this, now Spider and the Qs look a little differently, but specifically to small caps, you can see the candle that has developed here isn't really a bullish candle. Okay. It is still under the 10-day, or excuse me, the 21-day period moving average and holding right here at 195. We could see continued weakness. I will let the week play out before making any kind of final decisions, but definitely need some convincing really on all the markets, S&P 500, NASDAQ, and IWM before we jump back to the long side. Okay, now as we look at some of the other sectors, talk about USO for a minute and crude oil. Boy, now my Heikin-Ashi candles are still on, and you can see it looks pretty weak. All right. But let me put the regular candles on. And what I see with the regular candles is just a bunch of chop. Okay. We are really chopping around here as prices at the pump have been somewhat sticky. They were coming down and then they kind of rallied back up a little bit. Although there's not a direct correlation between crude oil and and prices at the pump, there is a loose correlation, and usually when we see sell-offs like this, prices would ease, and they've actually steadied. Now, what I see here is that USO, I'm not quite ready to pull the trigger on a delta neutral trade that would move sideways, okay, where we would profit from the stock moving sideways, but I'm getting close, okay? If we rally back up to about 67.5, I would be more inclined to do that sort of thing on something like crude oil, specifically USO. Moving over to the metals real quick, gold, boy, I'll tell you what, we rallied coming into the end of the year, and then we sold off, and we hit that. You can see here I have a line of resistance. Now, this is long-term. This is a long-term area of resistance. This is a previous high from some time ago. In fact, let me pull in more data on the chart. You can see here October of last year is where this chart is now. We go back even further, and oh my, we've got to go back to March of 2022, that spike high back there. That's how long it's been since gold has been up this high. So it's no wonder that we came right up, tested that area, and then are selling off. Today is kind of a weak day. This would definitely be a place to apply my Heikin-Ashi to kind of get a feel, and the feel is bearish, all right? Think gold could probably continue to pull back a little bit. We could begin to form a head and shoulders pattern possibly here, where this area over here in early December is the left shoulder, this is the head, and then the right shoulder would form through February and March. But it's obviously too early to tell for that, but it's something that I'm keeping my eye on. Now, SLV, silver, has been trading within the channel. Okay, if you don't like the Heikin-Ashi, let me pull the candle back on. Here, we've been just popping around, gapping around, and the problem with this is normally the novice eye would say, well, this is easy. Just trade a delta neutral trade that kind of moves sideways, where we'd make money with a calendar or iron condor. But the problem is pricing. The option traders or the market makers will definitely price in some expected moves, and sometimes those types of trades aren't as profitable as they could be. And so therefore we kind of avoid them. So It's not always as easy as it looks. We have to look for, anticipate things a little bit. And right now, the pricing on SLV doesn't warrant putting on a sideways trade quite yet. It might develop, but we'll see. All right. So moving on from that to the bonds, let's begin with the long end of the curve on TLT. Now, this is interesting. Okay. So TLT is moving down. Okay. Slightly. Okay. It rallied up. That put long-term interest rates just dropping like a rock. This move right here. Okay. Now we've reached a pivot high, and we're pulling back. So rates are rising just a little bit, not anything too crazy. I like to see this little orderly move right here. So what would happen, where I like to use this, is comparing it to the short end of the curve. Okay, so this is 20-year Treasury bonds. Okay, 20 years and longer. So if I look at SHY, all right, you can see this being the 1 to 3 years, so the shorter, what we call the shorter end of the curve, you can see a much different pattern. This is stuck in a uptrend, meaning rates are dropping. Okay, so this is actually somewhat good news if you're an overall bull and you want a, quote, soft landing, because this is flattening the yield curve. We've been inverted for over a year, okay, about a year and 4 months. And that is not healthy for the markets. And it often forecasts a recession. Now, there is a lot of mixed commentary. Are we going to have a deep recession? Are we going to have what we call a soft landing? That book is still being written, okay? But the curve is being flattened. We're not corrected yet to where short-term interest rates are lower than long-term interest rates, but we're getting there, okay? And we'll be keeping an eye most definitely on that. So bringing up that inverted yield curve, you can see that this is as of the end of trading on Friday, okay? And so this will actually spike back up. It will bounce off that 50, and it will kind of, the closer we get to really that zero line, all this time, all this purple that you see here is that inverted yield curve. So that is where we are. That's what we're keeping an eye on there, Brandon. So lots to talk about in the markets, and obviously what's next is earnings. We got a lot of earnings coming up. So kind of a crazy week.
Well, I'm just listening to you tell these story. The soft landing, obviously, you said the book's still being written, and I agree 100%. Nobody knows what's really going to happen, but seeing that yield curve, the way that you explained it, and the way you showed that on the charts really kind of says, yeah, we may get that soft landing that we're hoping for. It might not be as an abrupt, I guess, recession as some people feared to begin with earlier this year. So that might be good. But we do have earnings coming up still, right? What do we have on docket this week?
Well, this week, not only do we have this week, but for the month of January, believe it or not, Brandon, we have over 1,000 companies declaring earnings. So it's really, this week is relatively quiet except for one day. And let me explain. Okay, so today we have just a couple of earnings after the market. We did have Helen of Troy this morning. That's a stock that I usually like to trade. And that trade is still ongoing, believe it or not. And then tomorrow we have a slew of earnings before and after market, before trading and after trading tomorrow. And then we begin the economic announcements. Wednesday we have wholesale inventories, and after market close we have a home builder, KB Home. Now that is one to watch, okay? And then Thursday, we have initial jobless claims along with core PCI. Those come out first thing in the morning, and we only have one earnings announcement. And then all this is a buildup for Friday. And Friday, we have producer price index early in the morning. And then before market open, we have United Health Group, JP Morgan, Bank of America, Wells Fargo, BlackRock, Citi, and the list just goes on. It seems like Delta Airlines also has earnings that day. So we begin the financials. JP Morgan and Bank of America are two that I would be watching kind of closely. Believe it or not, these stocks don't tend to move very much. They may gap up 1 or 2% around earnings. It's very seldom that we'll get double-digit gapping like we like to see with some stocks. But this could be a market mover on Friday, not just in the stocks, but this could begin to set the tone for earnings announcements through the rest of the year, month. Okay. And really we heat up with earnings as the more we get into January, the more that come out. And really February is where we get a boatload of earnings announcements. So really
I think looking at that list Friday, Jeff, you notice a couple of things. Obviously, there's a lot of banks that are reporting earnings there on that list, but another one that I think might be interesting when you watch the earnings call there is BlackRock. If they do get that approval on Wednesday, they were the forefront leader in this Bitcoin ETF. Their earnings call might be interesting, and they might be able to mention a few maybe some foresight into what they think will generate as far as revenues. Their fee structure is one of the lowest on the list, so I think they're going to be one of the bigger players in that game. So that could be interesting to watch that as well.
Well, it will be an exciting week and really a good day to watch on Friday. Yep. Watch market action on Friday. But the stock that I've really got my eye on this week for potential move is KB Home. Okay, just with interest rates coming down, the home builders in general have been on fire. Okay. All of them have been rallying. You can see KB Home is, if you look at the chart, you can't see much of it, but you do notice that the stock has been a benefactor of the housing market. And, we would expect or could see, especially with interest rates coming down, allowing the home builders to profit a little bit more, because when interest rates were higher, they were having to give away concessions to prospective buyers. They were offering, a certain amount of cash to buy down your interest rate, or a certain amount of cash to make upgrades to your build, or what have you. Now they don't have to do that so much. So we'll see what happens with KB Home this week through earnings. So I did a little strangle here. What I found interesting is that pricing here for the strangle is is inexpensive in relation to the stock price. So Brandon, that is our stock that we will keep track of this week through the earnings event, and we'll come back really in 2 weeks. I don't know if we'll be back next Monday because markets are closed for MLK Day next Monday. So we'll be back in 2 weeks to talk about it.
Well, and that's okay. I think we'll watch that maybe for a couple of weeks, see how that trade plays out, and then we'll watch the rest of these earnings calls and how they go. And there's so much happening in the market right now, and it's shocking because I know we've been saying this every single week, even as we went through the holidays. The markets are crazy right now, and there's so much to watch. And so obviously having you, Jeff, alongside us to be able to kind of read these and watching the way you play those charts over with the Hub trading software, it's really helpful to help illustrate what's happening in the market. Even when you throw those Heiken-Ashi candles on, it helps me be able to see things and kind of visualize them and help me see what's happening. But Jeff, obviously I want to be able to tell people where they can find out more about how you trade and where they can sign up to maybe get something free from you. Where should they go before we take off for the day?
Well, since we've been talking about earnings and we're talking about stocks that are moving, we do have a free guide on how we trade straddles and strangles around earnings. And that's available from what you see on your screen here, ewotrader.com/straddle. You can go there and just tell us where to send that document, and it's free to sign up. And you can read on how it's not when you learn about trading options, you learn this basic strategy, buy, call, buy, put, but people try to do it on stocks that they really probably shouldn't be doing it on, and they have a bad experience with it. Okay, but I'll show you here how we trade them, and specifically what criteria we use to enter these trades. So, Brandon, that's where to go: ewotrader.com/straddle, and get that free guide today.
Yeah, thanks for that, Jeff. Guys, go there and get that guide if you haven't gotten it already. It's free, and it shows you everything that you need to know about trading with Jeff here. Jeff, thank you for dropping by. Your insight, as always, very valuable for us watching the market. You're charting above anybody else, and we love to see that input that you give us. And for the rest of you, we will see you all, if not next week, in 2 weeks back here so we can go over Jeff's trade and get some more trades for you guys to watch going forward. We'll see you in the next one.